the red because valuation wise, well, that stock as well, it's relatively cheaper than what it's been in the past, and it went weak into the numbers as well. So stock is now down close to around 1.5%. Electra Green Tech, well, they won quite a few bus orders, so that stock as well has opened up. I think it's opened up with a gain of close to around 5%. Or large order win is what they've gotten. A couple of other smaller names, HLE, the stock is up close to around 5%. Volume's not very, very high. The stock has seen a sharp correction, HLE Glasscoat. So keep an eye out on that one as well. It's up, I think, close to around 5% as we speak. Well, a couple of other names as well that we're looking at. Some of these refiners, MRPL, Chennai Petro, remember they moved up, ferociously. Both those two stocks, today they've opened up with a cut of close to around 5% on the lower side. So both those two stocks are struggling. But a start in the green, the Bank Nifty is up more than 100 points. The mid-cap index as well, mildly holding in the green. Anuj.
Oh, yes. The Bank Nifty started soft and is now actually building up. Tata Steel is seeing some short covering. That stock is up about 1.5%. In fact, it's not alone. It's got company in terms of JSW Steel as well. Reliance clearly is your stock which is trying to bat for the bulls. That is clearly helping. And a couple of other stocks which stand out, Chambal Fertilizers and Delta Corp. Madhu Kela is joining us, founder at MK Ventures and one of India's best-known investors. Madhu, good morning. Thanks a lot for joining us. Madhu, you are someone who looks at data, right? And you sent me some very interesting data points. The one that stood out for me was in terms of the FII outflows and the kind of selling that we have seen in our market. But this kind of selling, one could argue that the market's actually been quite resilient. Your first thoughts on that?
Yeah. First of all, thank you, Anuj, and everyone. Thanks for having me here today. Anuj, just, because there is so much noise, so we decided that we'll dissect the data and we'll understand by the data where the markets are headed. So if you look at, FIIs have withdrawn roughly 3.25 lakh crore rupees from secondary markets in last 8 months alone. Now this is equal to all the money which came in India in last 10 years. I'll repeat again, from 2011 till 2021, the net inflow in the Indian equity market, in the secondary market, were roughly 3.4 lakh crores. And the net outflow in the last 8 months has been 3.25 lakh crores. So there is obviously a lot of money which has been withdrawn, and it need not necessarily be only got to do with any India-specific problem. It could be relating to the global meltdown which is happening, the global inflation concerns which are happening, and a lot of these investors may have lost their pants out in some of the markets which have not done well, maybe Russia, maybe China, and partially it is also because of this. However, I must add, while there has been such a significant outflow from the secondary market, FIIs have put roughly 1 lakh crores in the primary markets, which is in the offerings which have happened in the primary markets in the same time frame. However, still considering all that, there is a significant selling which has happened, and FIIs which used to be roughly 22.5% of the overall market cap have now fallen to below 20.5%. So these are all significant numbers. This compares anywhere in the past, even if you consider the global financial crisis, the outflow of the FIIs was not so significant. However, at that time, to your point of resilience, however, to your point of resilience, what I am trying to say is that markets are far more resilient this time, because on a significantly lower outflow, at that higher outflow at that time, markets have tanked more than 50%.
Okay.
This time, while the outflows are significant, markets are only down 15-16% from the peak.
So Madhu, in that case, of course, that's the fund flow situation. The other point for the market moves in the near term on liquidity and in the medium to long term on fundamentals and on earnings, right? How's the earnings picture looking in terms of the earnings picture and in terms of the market valuations? Are we still above the median valuations? Do we still need to correct more? Because 21 was a raging bull market. So obviously, a lot of sectors got way above their median valuations.
Yeah. So Anuj, valuations actually have moderated quite significantly. If I take, let's say, 1 year forward earning of Nifty, now we are close to maybe 15 times of 1 year forward earning. If I consider 2024, and after a decade, for the first time, अनुज ये क्या है, लास्ट 6 साल से चल रहा था, अभी अर्निंग ग्रोथ आएगा. This is the first time actually we have seen the earning growth come through in the Nifty and in the broader stocks as well. So valuations have moderated quite significantly, and they are now at reasonable level considering even the recent past of last 3-4 years.
Madhu, hi, good morning. A lot of retail investors entered into this market in the peak of the pandemic, correct? And those investors have not really seen a big correction. This is the first real 15% correction that those investors have seen. What is your advice to them?
So Sonia, my advice is that I've been saying since beginning of the year this time. At least once I can say that we were really bang on that. Don't extrapolate your success of last 2 years. This is the time to conserve money, be moderate in your expectation, and all that picture is actually played out. But Sonia, when I look at the broader market, it gives me a conviction to say that this is not the time to now panic. So if you are seeing the news flow every day, if you are seeing all the inflation talks, if you are seeing some of the corrections which are happening, so the broader market, Sonia, not only in India but worldwide, have corrected significantly. I just give you one small data point. So more than 50% of the company in Nasdaq out of 3,800 have corrected more than 50% in the last 8 months. I repeat again, more than 50% of the companies have corrected more than 50% in the last 8 months in Nasdaq alone. And India also the similar story that in the broader market, more than 30% of the companies have corrected 50% or more in the last 1 year. So the broader market damage has actually happened significantly. And it is only that people who live in fool's paradise, they think that they can catch the bottom. I have been here for 32 years. It is a futile exercise to say that I'll be able to catch the bottom. So what the point which I am saying, the people who have stay invested, have faith and use this opportunity. There will still be a lot of noise looking at the headline number, sometime about inflation, sometime about government trying to tame, one sector will get hurt. But we must use all of this noise over the next 3, 4, 6 months to invest wisely, to invest selectively and have faith. And just again, Sonia, to give you a very big data point, Nifty actually has been one of the best performing index in the world. I repeat again, Nifty has been one of the best performing index in the world on a 1 year time frame and also on a 10-year time frame. So that is telling us something that the entire story which we keep talking about, India being resilient, India being the fastest growing economy in the world, and India getting geopolitically also very important, is actually reflected in the markets. It's not only the talk. When the market gives you this kind of outperformance, that Nifty has delivered 240% return in the last 10 years, and it has delivered roughly 7-8% positive return in last 1 year, while most of the other major markets are down.
Morning, Madhu. Always good speaking to you. The equity markets have done well, but the sector that's been struggling for the last decade or so has been the real estate space. It appears it's getting its act together, and now there is plenty of interest out there. The data point is, I think, that the total market capitalization of all the listed companies is 300,000 odd, 3 lakh crore odd. Well, which part of that, upswing are we in terms of real estate? Are we in year 1, year 2? Normally, we see that upswing, I think, for around 7 to around 8 years odd. So, are we getting started out there?
Yeah, again, Nigel, these are the data points which you collect. So not only real estate, but even when you look at the EPC companies, all of them put together have only 75,000 crore rupees of market cap, which is like 0.25% or 0.3% of the overall market cap, and real estate as the overall market cap is maybe 1.2, 1.3%. So I believe that we are in a good cyclical upturn in these sectors, and any decline here, like what we saw in the last 3-6 months, a lot of the real estate stocks or a lot of these EPC companies have corrected significantly. I would say that, no one knows that whether we are at the bottom, but over the next 3, 4, 6 months, we should use all this noise which is happening at a macro level to buy selectively stocks in these sectors.
Madhu, you are someone who's picked up so many stocks, but there's some stocks which are synonym with you, right? Like Divi's. And the entire pharma space for that matter. I remember last time you were table thumping bull on pharma 2 years back. We are almost back to those levels now after that big rally in terms of the combined market cap. Do you think the market's overreacting, for example, yesterday to Divi's and in general in the mid-cap pharma space and the way the valuations have got corrected once again?
Again, a very good question, Anuj. So I am just saying, pharma, when it bottomed out in 2020, the overall market cap to the pharma market cap had fallen to 5%. Then in the rally, it went up to 9% of the overall market cap. It has fallen back again to 5.9%. So we are essentially near the lows of 2020 on a relative basis vis-a-vis the pharma sector. And I would feel selectively, specifically in the mid-cap pharma companies, if you see the kind of capex these companies are doing, and more importantly, the capex is happening out of their cash flow. The second point is, last 18 months because of COVID, there were no FDI inspections. So a lot of these companies did not get any product approvals. Third, if you look at the recent performance of all the companies, including what we saw of Divi's, essentially the markets, they have positively surprised the markets in terms of earning. But at the same time, as I said, there has been a significant correction in the prices in absolute as well as in relative terms of these pharma companies, specifically the mid-sized ones. So I will certainly be a buyer of some of these companies selectively.
And just a follow-up, Madhu, on the other big sector, which is the automobile, because for last 2-3 years there were a lot of concerns both on demand side and on supply side. Now with the way we've seen some cool off in metal prices, do you see the demand side also sort of reverting back to mean, and do you see good value in this space?
Anuj, again, demand, if you speak to any auto company, forget India, but if you see even worldwide, there is really a significant excessive demand which the companies have not been able to fulfill, mainly because of the chip shortages in the last 12-18 months. Hopefully, all those supply side disruptions should ease off over the next 6-9 months or so, and with this easing prices of raw material, that should help some of the select auto companies. But we are, while we are positive on select auto stocks, we are more positive on auto ancillaries, which are even become more attractive than the auto company itself. So, our emphasis is more to play this auto cycle, to buy auto ancillary stocks rather than the mainline auto stocks.
Okay. Madhu, as someone who's managed money for so long, as someone who's an investor yourself, how do you avoid accidents like what's happened with steel, where, in 2 days, 18-20% falls of what we've seen. This has been such a volatile space as well. What do you do at a time like this?
Sonia, let's not forget that the kind of money which was being made by in the steel sector and even by the steel companies in the last 2-3 years. Again, life has to come back, it has to reverse to the mean, And one thing which is clearly government is signaling that, all politicians, I want to mention this point about inflation, that all politicians and all central bank governors are clearly focused on taming down inflation. And this whole worry about inflation, I do not think we should worry about the reported inflation number. it is always the inflation expectation which are more important than the absolute inflation number. And I think inflation expectation will be tamed down significantly over the next 3-4 months. And hopefully market will start to recognize those tamed down inflation expectation in the next 3-4 months. So governments will do whatever it has to do to tame down inflation. And we have to be careful, whenever the excessive amount of money is being made and it falls into the radar, we have to be careful in terms of investing. And obviously what happened to my mind, again it's my personal view, some of these duties look quite heavy, at least in the short term. 45% duty on pallets, it looks quite little abnormal. But again, this is the nature of the markets and this is the nature of the government, that when they're serious, they will do whatever it takes to tame down inflation. And this is one event which has happened. I do not think that one should be really scared that similar events will happen in a lot of other sectors, because steel, of course, is one of the large sectors. But I'm not excessively worried. There will be duty adjustment. It is well again spoken about that whatever needs to be done to control inflation, government will do. But I don't expect similar accidents to happen in other sectors.
No, my question was more not about other sectors, but what one should be doing in this sector when such a big drawdown happens. I take your point that this duty has been excessive, but this fall in steel has been now, what, for a year, right? I mean, most of these stocks are down 40% in the last 12 months. Do you keep the faith? Do you move out, particularly for the metal sector?
Yeah, Sonia, again, I think selectively is for people to decide their time frame. But selectively speaking, some of these companies will become attractive. We don't know whether this is the bottom or next 1 month there is some more fall which has to happen. But if you look at a lot of these companies, their balance sheet, Sonia, has never been as strong. At least in my career, I have not seen these kind of strong balance sheets of metal companies as we are seeing now. So obviously at some point of time, they will become good value.
Okay, one last question, Madhu, and since you've done a lot of work on this whole global data points, are we in some kind of a bear market globally? Looking at the US itself, because if US is in a bear market, in the near term, the Indian market will follow suit, right? In the medium term, they may get decoupled, but is there some kind of a bear market on the horizon?
There are no doubt about it, Anuj. When you are talking about stocks like Netflix and Shopify falling 80%, it is a clear bear market, and Nasdaq has fallen, the index itself has fallen by 30-35%. There is no doubt in my mind that, but the whole question is, it doesn't look like the classical multi-year bear market as we have experienced in the past. What it looks like is that the prices have fallen far more steeply in the short run itself. So maybe this bear market will not be living for many years, and maybe it will be a swift fall and then consolidation. And again, selective companies, wherever there is strength, they will start to go up. In Indian markets, is not decoupled at all. As I told you, even in Indian market, there has been a steep correction in some of the mid-sized companies, even though the broader indexes are not telling that story. But there is a correction and there is a correlation to what is happening globally, even in the Indian markets. Okay. And let me just, before I go, just to summarize, the point which I am saying, that we have already seen significant correction in the market, specifically in the broader market. All the noises, whether it is the geopolitical situation or the inflation expectation or the logistical issues or earnings being compressed, there is enough noise which is being made in the market. So all I am saying is this is not the time to be afraid. This is the time to keep faith and systematically invest selectively in stocks and sectors which you like over the next 3 to 6 months.
Okay, Madhu, it's always a pleasure to talk to you. Before we let you go, you want to make any disclaimer on any of the stocks or sectors that you may have commented on?
Yeah, Anuj, whenever I come here, I speak my heart out and I speak very frankly. So all which I spoke about sector, companies has to be, you must consult your own advisor before acting on it. Okay. And I must highlight one risk which we did not, in the interview. See, oil price still remains the joker in the pack, at least in the short term. So if the oil price move up significantly even from here, which I don't know whether it will or not, that will definitely impact Indian markets, particularly in the short term.
Okay, Madhu, point taken. Thanks a lot for joining us. Good talking to you as always.
Thank you so much. Thank you so much.
That's a very candid Madhu Kela across, talking about a